Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to our weekly podcast. Indian equities outperformed global peers as investor positioning remained cautious amid deteriorating global growth outlook and increased risks to corporate profitability. Major global equity indices recorded weekly gains, with the MSCI Asia ex Japan and MSCI World indices up 0.8% and 1.3% respectively, while the MSCI China index declined 0.5% for the week. In the US, S&P 500, Dow Jones and Nasdaq Composite Index rose 0.8%, 1.2% and 0.3% respectively. Back home, Indian equities extended the positive momentum for the third consecutive week. The Nifty index rose 1.3% over the past week, supported by foreign investor buying, positive quarterly business updates, and improving macro data supporting expectations of a prolonged pause by the RBI. Broader markets outperformed Nifty, with the Nifty Small Cap Index up 1.5%, while the Nifty Mid Cap Index was up 1.7% for the week. Among sectors, realty, auto, and metals were the best performing sectors with gains of over 3%, while telecom and IT were the worst performers with cuts of over 0.3% during the week. The Indian fixed income market came under pressure over the week, with bond yields rising higher after falling sharply over the previous week amid overbought conditions given a surprise pause in RBI's policy rate hike. Further, still elevated core inflation also pressurized bond yields later in the week. For the week, the 10-year Indian government bond yield was up 1 basis point to close at 7.21%, while the 3-year and 5-year Indian government bond yields rose 4 basis points and 5 basis points for the week. The INR appreciated marginally, posting gains against the USD for the third consecutive week amid a weaker US dollar and improving foreign investor inflows. For the week, the INR rose 0.1% to close at 81.8 against the dollar. Moving to the macro data released during the week, the first one was on India's industrial production, which grew 5.6% year-on-year in February 2023, up from 5.5% recorded during the previous month, and market expectations of 5%. Output increased the most since last November, driven by a pickup in factory activity, which rose 5.3% compared to 4% in January. Within manufacturing's largest sectors, output rose at a faster pace for pharmaceuticals, medicinal, chemical, and botanical products. However, growth rates slowed for both mining and electricity output sectors during the month. The second data was on India's consumer price inflation, which eased to 5.66% in March 2023, the lowest since December 2021, and the print of 6.44% recorded in February. The moderation was largely driven by a slowdown in food article prices, which stood at 4.8% versus 6% last month, as prices for vegetables, oils and fats, and meat contracted sharply, partially offsetting the rise in cost for cereals, milk, and spices. A moderation in prices were also seen in cost of fuel and clothing and footwear. On the other hand, prices rose faster for the housing sector. The third data was on India's merchandise trade deficit, which widened to USD 19.7 billion in March 2023, higher than the USD 17.4 billion recorded over the previous month. Exports were down 13.9% year-on-year to USD 38.4 billion in March due to lower sales in major regions like Europe and US, while imports declined at a softer pace of 7.9% year-on-year to USD 58.1 billion. For the fiscal year 2023, imports rose 16.5% year-on-year to USD 714.2 billion, while exports grew 6% year-on-year to USD 447.5 billion, supported by growth in shipments of petroleum products and electronic goods. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.